Hi everyone. So today I have one of my best friends, Justin, with me because he is a crypto expert and he spent the last 4 years deep into the crypto world. He makes his living in the crypto space, and out of everybody in the world, I would say that Justin has he'd have to be in the top 1% of people who knows about cryptocurrency. And I think he's a great person to have on today to have a bit of a discussion about why cryptocurrency could be good, could be bad, whatever it is. I have some interesting questions from my point of view as a value investor about why Justin is even in crypto in the first place. So I have my list of questions. I'm going to do it in interview style, and okay, let's do that. I'm just going to read the questions off my phone here, so that's why I'm looking down. So for me, as an investment, is only as good as the free cash flow an investment makes. Often that is returned to me as like a dividend or through share buybacks or something like that. I mean, like a rental property gives money back to me each month, and after I pay all the costs, whatever's left over is my return on investment. Even a music royalty, for example, pays me each year as well. But Bitcoin, or any of the cryptocurrencies, Bitcoin in particular, does not return anything to the investor. So how is it an investment?
Sure. Okay. And I agree. And we actually have chatted about this before, and we think quite similarly about investments. And I think there's two kinds of investments that you can have. And sometimes these two investments are in the one thing. So if you've got a share or stock, there is the appreciation of that scarce stock. That is one part of it. But it's also returning you, because you own a part of a business, it's returning you some sort of financial reward or some sort of reward.
Yeah.
There are things that are still considered investments that I think needs a better word for them. I don't know what the word is, but like art can still be an investment. Things that are scarce by nature, but don't actually have a tangible, predictable return. They don't produce anything of value. They just value because of their scarcity, and what you're betting on is that they will continue to be scarce in the future.
All right. So Bitcoin is a bit like art?
Bitcoin is a bit like art in the sense that it's scarce.
Right.
And it has the attributes of any kind of scarce asset. But like gold is still an investment. But it's not a business, right?
Yeah, so everyone compares Bitcoin and gold a lot.
Yeah.
Why is that? Because it's scarce, is that right? But
yes.
But I told you this yesterday because I was a bit confused. Gold can be manufactured. Like let's say in the future, 10, 20 years time, and it becomes affordable to do so. People in a lab at home could literally make gold, right? Because it's a chemical compound. They could put it together and it's gold.
Yes.
Or change steel to gold, or I don't know. The future has got that possibility. Therefore, there could be an abundance of gold.
Sure.
Therefore, gold could be worth very little if it just could be made like that.
True. If anything can be that's derives a lot of its value from scarcity. Okay. If you can get rid of the scarcity and create abundance, then it loses its value.
Okay. So Bitcoin is different because it's finite. It's scarce because there's only going to be 21 million of them of all time. Yeah. And that gives its value?
Well, I wouldn't say that gives it value. Just because something is scarce doesn't necessarily make it valuable.
Right.
I think of a few things that are scarce but aren't necessarily valuable.
Okay.
There's a degree of utility you get from having a Bitcoin.
Okay.
And in general, I would say you get to participate in maybe a new financial system.
Okay, so let's explain that. So talk to me about why. Tell me that idea of Bitcoin's important into a new financial system. Why? So gold's been around for. If we're going to compare it to gold, which I guess is easy enough to do. It's been around for 200, 300 years. Back in the day, people used to use it to trade with. Now we use money instead. Yeah. Why do we think Bitcoin is going to be useful?
Sure. Okay. Well, I think it's going to be useful in the same way that gold is useful. Maybe a bit more, specifically Bitcoin. And all the other cryptocurrencies have various different pros and cons and different applications. But Bitcoin specifically functions like gold. And it will act as what's called maybe base layer money or first layer money, which is that 50 years ago, before we had normal currency, like fiat currency, our currency was backed by gold. It was backed by something.
Okay.
And gold has been used as a currency for like 100 years at least. And Bitcoin will act as the base there, like gold does or did for money, for the new financial system. So it's very secure.
Okay.
It's
why new financial system? What's wrong with our current financial system?
There's a number of things wrong. And I wouldn't say that it's terrible, but there's a number of things wrong. Is that it's very, very difficult to innovate in our financial system. There's huge amounts of regulation.
Sure.
Right. And if you think about any kind of progress in society, you need innovation. You need people that aren't really qualified to be doing stuff.
Wait.
To be able to build things.
Okay. Let me argue that point a little bit.
Sure.
I feel like there is huge amounts of innovation in the world generally, and it's incentivized by the idea of getting money back. So pharmaceutical companies, for example, will spend billions of dollars into researching new drugs, put that out into the world, and get the return on that investment. You've got Silicon Valley; a whole world revolves around money. Why?
But the money hasn't innovated.
The money itself hasn't innovated.
The money hasn't. So, and the financial system hasn't innovated. Like insurance companies are quite similar to what they were 100 years ago.
Okay.
You as an individual most people are left out of innovating. It's different than how software is. If you're Mark Zuckerberg and you're underqualified to do anything, but you are in your dorm room in Harvard, you can build a huge company with very little restriction.
Okay.
Right? You can't do that for a financial company. Still.
Okay.
It's better. But you couldn't create a financial company in your dorm room. And that is where and I'm not saying that that's necessarily going to be a huge amount of value there.
Sure.
But that would be a good reason and they probably will build something of value.
Okay,
there.
so it would be possible, you think, with a better financial system, it would be better for, say, a startup insurance company to get started without a lot of capital, like Facebook got started on the internet, becoming a huge company with very limited resources at the start. You're saying that could happen in the financial space.
Yeah, sure. So maybe someone finds a new way to organize people for financial products, so new types of insurance companies, new types of investing strategies. And with that does come a great deal of risk. Sure.
Okay.
Like the reason that financial markets are regulated is because people lose lots of money and people are dodgy and they steal money and stuff.
There's bad actors, of course.
I'm not saying that there's no good reason for regulated markets. What I'm saying is that that regulation does stifle innovation, and it will be better, but it will also be more risky. It's like the Wild West. There'll be a lot of cool stuff that's being built.
Sure.
There'll also be a lot of scams. There'll be a lot of
and
you'll have and people have to navigate that. And people are going to get burnt. I've gotten burnt.
Yeah.
Like it's not going to be something that you can just get in without any education. But I think it is going to be better.
So how does then Bitcoin fit into this idea of some sort of new financial model where people can be creative and build financial services and financial products? Yeah, okay, you said it's a bit like the Wild West and there's going to be a lot of scams and bad stuff going on and bad actors, but how does Bitcoin play a role in that? And why does Bitcoin help that? Why does it make that happen?
So Bitcoin offers, like we referenced earlier, what's called layer one money. So it offers a very, very secure basis upon which to build things. It's fundamentally just a very a provably scarce digital token.
Yep.
And you can build a lot of cool products on top of that.
Okay.
But it functions like gold in that way. You needed gold in order to build any kind of financial system 100 years ago.
Sure.
Right. If you didn't have that, you can't build insurance. You can't build any investment products.
Okay.
You need some sort of stable token unit of account that maintains value through time.
Okay.
And it needs to be scarce. And for the digital, for the physical world 100 years ago, that was gold. For the digital world, it will be Bitcoin.
Okay.
And
that was a pretty good explanation. I think that we'll leave it there. Let's move on.
Sure.
All right.
Okay.
All right, next question.
Yeah.
So why do people talk about Bitcoin so much? Like I'm talking taxi drivers, the guys who were doing my haircut yesterday were wanting to talk about it. It's extraordinarily popular. And what, in your opinion, why is it so popular?
So I think there's two reasons. There's the first reason I think is less likely, but it's still true.
Okay.
Is that Bitcoin as a protocol, as a technology, lends itself to certain ideologies, right? So its very existence says something about freedom, about transparency.
Sure.
And those ideas, no matter if you're like super hippie or if you're super right wing, you value freedom in certain ways, and so you can associate any ideology you have, and you can put it onto this technology. So that is rare for a technology to, by very existing, have certain values embedded into it.
Explain that a little bit more. Just like why does Bitcoin equal freedom?
Okay, so Bitcoin can't be controlled by any. It's not controlled by any third party. Which is in the context of like traditional money, which is controlled by a government or a central bank. Mm-hmm. It's transparent because anyone can see any transaction.
Yep. Which I like.
Which is
cool.
Also an ideology that people gravitate towards. And so for some people, I think it becomes like a religion. It becomes part of an expression of what they think about the world, right? And so people if you had just been converted into a religion, you would want to talk about it. So that's the first reason, and I think that's a nice reason. I don't think it's true though.
Okay.
Well, I don't think it's completely true. I think there are people like that, and there are people that are quite religious about their crypto. Mm-hmm. What I think is more true is that people like to talk about stuff that makes them money. Right?
Okay.
And if you're gambling on certain assets and they're just going up in price, it is top of mind, and that's all you can think about. So you just tend to talk about it. And Bitcoin isn't simple like any kind of gambling machine. It's quite a complicated, and it has all these things that you'll learn something new about it every day. And I think that keeps people preoccupied and lends itself to conversations. So that would be the reason. Ideally, it would be because people are religious about it, but that probably only makes maybe 10-20% of people. The rest are just gambling, and they really like to talk about things that they're gambling on.
Yep. Yeah, okay. People do like to talk about their winners. Yeah.
Yes. Yeah, exactly. I invested in this company, or I did that, and it's up 10% today or 20% the next day, and that's quite engaging. And like you can understand why people would just really want to talk to anyone about it. And also they have incentive, right? So they both of these groups of people have an incentive in telling you how amazing and awesome it is, because you should
get on board the train.
Get on board the train, which I should say as well. Like I own some crypto, and I have an incentive in this communication to convince you that this is a good idea.
Sure.
Or to convince your viewers as well.
Which is going to be very difficult to convince me this is a good idea. But
but I do. But that's what you're saying. So like, why do I talk about it? Well, talking about it actually makes me money.
Sure.
In a very glib way of looking at it, a very simple way.
Okay, that was good honesty of you. That's good. Okay, cool. No, it's good. It's how a lot of people think about their stocks as well. You buy a stock and then you go around. It happens online all the time. People buy something and then they talk it up all the time, trying to build the hype around that stock so it goes up in value because they have an investment in it.
And I think it's not always kind of deceitful, or like I think people really do believe.
I agree.
This investment is amazing and it's going to change your life. Mm-hmm. But they might also be wrong and uneducated. So. Yeah,
so I would try to. I think the lesson here is to take a balanced approach to anything. If you hear something, Justin's very pro crypto, I'm going to be probably quite anti crypto. Not anti crypto. I actually like the idea of cryptocurrency and blockchain technology. I like that idea. I just don't want to put any money in it because I don't understand the return on investment that I'm going to get. Yeah. Like I said earlier. I don't see it even as an investment because it doesn't give me anything back. It goes up and it appreciates. It has been appreciating in value, but we'll get to some more questions in a moment. We'll get into what's it actually worth. All right, so the next question is, are we in some sort of crypto bubble?
Okay, first I want to, because I think there's different ways of approaching what a bubble is. So the way I look at it would be that you can have a bubble in any kind of asset, any asset where there can be any speculation, which is any investment really. And any asset is at one point or another in some sort of a bubble, right? And let me explain. I think it's down to the amount of people that are buying the assets that have no good reason to buy it.
Okay. Right. That makes sense.
Okay. So you can buy an asset for a number of reasons. If you're a value investor, you're buying it because you think the long-term outlook of this company and the profit is a great deal, and that's why you're buying it. And you have a sense of conviction, right? You can buy it for other reasons. You can buy Apple stock just because you love Apple and you have a kind of religious love for Apple. That can be a good reason, because when Apple has a bad month or a bad year or a bad quarter, you're not going to just suddenly sell, right? But that's what causes bubbles, is people are just buying because they think the price is going up and they have no good reason to buy.
Yep.
Okay. You can still and you can still buy because you think the price is going up, but you're not going to sell because you have a bad month or a bad quarter, because you have an idea of what it should be worth, and if nothing's changed, then you're still going to hold the asset.
Sure.
So that's what I think a bubble is. So you can have you have bubble-like behavior in any asset, but Bitcoin is a lot harder to work out what it's worth. So it's going to have more bubble-like behavior by its nature.
Sure.
So the answer to your question is, are we in a bubble? Yes, but I'm not sure where we are. I'm not sure where we are in the cycle. I think it's past the beginning. Like, I think we are definitely in it. And obviously we're not at the end because it would have burst already. But maybe we're somewhere in the middle.
Right. Okay. So if you think we're in some sort of bubble, then that also means that there is some way you're seeing its value, and we've worked out some way to value the asset, because if it was in a crazy bubble, you would know it's in a crazy bubble because it would be seriously way past what you think its value actually holds at this current moment. So about value, how are you looking at valuating Bitcoin?
Sure. Okay, so first thing I would like to correct there is that you can, it's very unlikely and very rare, but you can have a decoupling of the bubble doesn't necessarily mean the thing. It doesn't dictate the value of the thing. So you can have something that has bubble-like behavior, but it's still worth what people are paying for it.
Okay, so you're talking about behavioral economics now. So we're talking about like people jumping onto something without any fair reason. That's bubble behavior.
Yes.
So therefore it's showing signs of a bubble, even though, let's say, something is the value of Bitcoin is actually supposed to be $1 million. That's what it's worth today.
Yeah.
But the way everyone's talking about it even feels like a bubble because of that. But it doesn't mean it still could be undervalued.
And it'll still exhibit the same kind of effects of what a bubble would, and you still wouldn't want to be involved because of that, right? So what you want if you're an investor in anything is you want to be slightly ahead of what everyone else is thinking. You don't want to be so wrong that it takes 10 years for everyone to realize that you were right.
Okay.
Right. And that's kind of what being a value investor is. You're able to play a long game and wait a few years for everyone to realize what you've seen because you've done your research. Right. So you don't want there to be too much of disconnect between reality and fantasy.
Sure.
And Bitcoin is very difficult to knuckle down because there's a lot of ways to dissect it. It's a very new technology. It's there's very many ways of looking at it.
All right, tell me how you value it then. So let's do that.
So I do it very simply, and there's many ways to do it.
Okay.
I think Bitcoin is like gold, and it's a bit better than gold in the sense that it's easier to transport, but it exhibits has the same features. It's scarce. It will maintain value through time. So and importantly, it is a hedge against any kind of central bank mismanaging their monetary policy.
Okay.
Right.
So, for example,
if a country like Venezuela or Zimbabwe or Nigeria decides that they want to print lots of money or screw up their economy in any other way, Bitcoin would act as a vehicle for people to get their value out of those countries.
Okay.
So it is a hedge. Whenever there's doubt in the US economy or any economy, the gold price goes up. right?
Okay.
And that's because people are using gold as a hedge. It's not a very good return on investment at owning gold, but it is a very good hedge if you think that they're about to print a boatload of dollars, for example.
So it's really, look, even though the US economy has been printing a lot of money, and you could argue that point a lot, but it has historically been one of the more stable economies for the last 100 years plus. But there are countries in the world that are pretty messed up, that are struggling, that have run by dictatorships who decide monetary policy without any understanding of what they're actually doing, that could ruin countries financially. Zimbabwe back in the early 2000s is a prime example. So I guess for the people in that country, they might need to move to something. If they get scared, if things get pretty bad in that country, they'll need to move to something. And you're saying Bitcoin is that thing? Yeah,
I mean, it might also be dollars. It will probably be both. But it'll be something else. And even if Bitcoin gets a little bit of that escape, the value extraction, it'll increase its price because it becomes a very, very important asset in those situations for those countries. So I'm not necessarily betting that the US economy is going to make any serious mistakes in the next 10 years.
Sure.
But I am betting that some country is going to make serious mistakes in the next 10 years.
Okay. It's interesting way to look at it. Yep.
And so if Bitcoin is a slightly better version of gold, and people that are maybe in their late 20s to early 40s are of the age where they actually have money, and they are trying to maybe hedge against kind of systemic risk with the financial system, instead of buying gold, they might buy Bitcoin.
Right. So then how do we get to the value?
So
let's get a number.
If we, so if we say that at the moment, Bitcoin's market cap is about 1 trillion.
Okay.
At the time of recording
I have no idea, but yep, right.
About 1 trillion.
1 trillion. Right.
Gold, I think, is between 9 and 10 trillion.
9 and 10 trillion, right?
That's the.
And you think this is a better gold?
I think it's a better gold. But even having said that, I think it's going to take time. There's a transitional period, right? Like with any kind of asset where there are people that are just never going to sell their gold. And gold will probably always have a place in some sort of portfolio, or maybe some people's portfolio. But
not my portfolio.
No, not Hedge's portfolio for sure. But there is this transitional period where Bitcoin is now going to become a replacement for gold. So if we say that Bitcoin is now 1 trillion, the whole crypto market is about 2 trillion. Let's say that maybe the whole crypto market ends up being worth half of the gold market, so 5 trillion. So that means Bitcoin has to double in a bit, right? And I would say that that's not incredibly optimistic, and that's also over maybe a period of a year, 2 years, and that puts Bitcoin at around...
Wait, you think that could happen in a period of 1 or 2 years?
Yeah.
Why?
I would say that the environment that lends itself to gold being something that people buy has come on quite faster than most people anticipated because of COVID, and because of various strains put on the economy. People are thinking, well, how do I hedge against this? And that momentum will carry forward, and people are going to
right. That feels very just, who knows? Like, that's a gamble, right? Okay. I can see how you've said it's a percentage of gold.
Sure.
That makes sense. I get that. People of our generation are going to be more interested in Bitcoin as a hedge because they'll know it's scarce, and gold might be able, like I said earlier, you might be able to make gold in a lab. Therefore, the scarcity of gold could be...
Well, and then definitely Bitcoin will be the thing that replaces it, right?
Right.
So that might be good for Bitcoin. In fact, it would be.
Trying to put a time frame on it seems very, who knows? Like, that's a very gambly, speculative thing to be saying, because we can't predict the future. We have no idea what's going to happen.
What I would say is that I think, given the kind of strains on various economies around the world, I don't think it's going to get easier over the next couple of years. And I'm betting on some sort of central bank screwing it up. And I think a 2-year time frame for that to happen is reasonable, because I don't think the world is going to get better quickly now. There was a time where it could have all turned around, but to start the engine again and get people, get economies producing what they did, is going to be a lot harder.
Right. So you think this is a pandemic related? It's going to be pandemic related in terms of its rise over the shorter term because I'm trying to summarize.
Yeah.
Some countries through the world are going to struggle more than others.
Yeah.
Some of them are going to have to print money maybe excessively because they're mismanaged, because they're dictatorships or whatever reason. And people in those countries are going to flock to stabler assets. We're talking US dollars, Bitcoin, gold, etc. Whatever else they feel like. Because of that push into those things from a couple of random countries, who knows which ones they're going to be, you're thinking that event is likely, therefore that will push Bitcoin further along.
Yes. So and it will push both gold and Bitcoin further on. So here's the there's a two-part valuation here.
Okay.
One, I think that over the next let's say a few years, maybe 2 years. I don't have a good reason for saying specifically 2 years. I'm just saying over the next period.
Yep.
Bitcoin is going to slowly replace gold. Let's say that it gets to about half gold.
Okay.
In terms of the whole entire crypto market becomes half of what gold is.
Okay.
Now I'm throwing a lot in there, but I'm actually doing that to make it more or less optimistic.
Okay, let's work out those numbers. So gold, what did you say, 10 trillion?
Gold's 10 trillion. Crypto market is 2 trillion right now.
And you think crypto could be half of gold, let's say, in the next period, a couple of years?
Yeah.
Therefore, it gets to 5 trillion.
Yeah.
Therefore, Bitcoin is around about half the crypto market.
Yeah.
Therefore, 2.5 trillion is your sort of ballpark figure at the moment.
So it's 1.5 more than what it is now. So now it's 60. So it's maybe 140.
Yeah, double and a half, 250%.
So
right?
150%. So it's $150,000. So it's $60,000 now. It's 150, whatever it is.
Yep. So there we go. We put a number on evaluation, which is about $150,000 in the next period of time. We're not quite sure where that is.
And that's
maybe
just
it's a couple of years.
And that's just the gold. It becoming like gold. Okay. What I also think is there's kind of you get a little bit for free, which is that I think. And this is purely speculation, but I think that financial institutions are going to, the financial systems of a lot of governments are going to take strain over the next period, 5 years. It wasn't supposed to be COVID. This was only supposed to play out over a 10-year time frame, I think. COVID wasn't really supposed to do it, and that's why it was a slower moving asset, because what was supposed to happen was that governments start becoming inflated and people stop paying taxes. That was kind of supposed to start happening over a long period of time. But what's happening now is that people are very, very worried about a mismanagement of government policy that's going to push them into certain assets, and they'll hedge. And even if it's a small percentage of the portfolio, even if it's 3% of the portfolio, if enough people do that, it's a huge push into the sector. And then people will do it for gold as well. Okay. So you get 150 pure if you get half of gold. And maybe you get a little bit of kicker because the whole market is also moving.
Sure, you think there is some upside potential
for gold
on top
as well.
of that as well. Okay, interesting.
Yeah.
This is now I'm going to give you my opinion because I think as a stock market investor who loves value and loves to spend my time researching the value of a business.
Yeah.
I feel like most of those things that you said of how you got to that value are a lot of ifs and maybes rather than this business is giving me X amount of money and it has done so every year for this many years and it's growing at this rate. Okay, maybe the growth changes, but I know that the actual cash flow that I'm receiving, there are some risks in stocks as well. Okay, I know there's mismanagement as well, but at least I feel like I can find 5, 10, 20 amazing companies that are super solid, that return me money. Therefore, it's very easy to count. Well, it's not easy, but it's relatively simple to project that out into the future. Mm-hmm. And I think that feels way more solid than projecting out Bitcoin's value.
And what I will say is that if I had 12 companies, I would do that instead.
Okay.
Probably. Probably. I'd have to look at it, but it's especially at this point in time, right? So to give context, I bought quite a while ago my holdings, right? Mm-hmm. So I would never buy now. right? Because the best case scenario, as far as I can see, is that maybe it doubles in a bit.
Yep. Okay.
Right. Maybe it goes more, but that's purely a speculation. I can't. But and it's not worth the risk.
Sure.
Right. Right now, because we're somewhere in a bubble, and tomorrow it could all come crashing down. But because I bought in quite a long time ago, it would have to come crashing down a hell of a lot for me to even lose any money.
Okay.
So if I had the option between buying Bitcoin now or 12 companies that I think might produce let's say 100% return over the next 3 years.
Oh, that would be 26% per annum. That's pretty epic. I would like to find 26% per annum.
What would I would even settle for 15.
Would you chase for 15?
I would say if I was pretty confident I could get 15% per year for 3 years.
Yep.
I would rather go into that now. But when I got in, that wasn't the deal. The deal was like 800%, over a couple of years. So it was a different thing. It was a different risk reward ratio. The risk reward ratio now is I wouldn't do it. In fact, as we've discussed, I'm looking at how do I get out of it, right? And I think I probably will get out of it at some point in the next few months.
Where would you feel like you're going to move that money to?
I would want to get something that gives me 15% a year.
50?
15.
I'll take 50, but 15.
50, I'll take any day.
15% per year.
Like, I think that would be, if I could find anything that was going to give me 15% a year. Yep. So would it be, and the problem is, I mean, I'm not as read and as researched as you are in stocks and stuff like that. So I don't back myself necessarily to be able to find those companies, unless maybe I decided that was what I was going to do and spend time in doing that. Sure. So I'd rather do more of what I've started doing, which is trading inefficiencies in the crypto markets. Yeah. So trying to keep the majority of my money in some sort of stable dollar, or something like that, and then do trade the market inefficiencies as opposed to actually holding certain risky assets, which I'm and I have over the last month as well started deleveraging those assets. Just
as a bit of background there, Justin is, like he explained just then, how he runs his business and how he makes his money is he's arbitraging and trading between the different cryptocurrencies of the world. He very, very deeply understands the different exchanges and the different cryptocurrencies, and he's definitely an expert at this. I wouldn't recommend anyone trying this unless you've done the time and put the effort into like Justin has. It would be similar to forex trading, would be my equivalent in the stock market world.
Yeah, I don't know. I don't want to be pumped in with the forex.
Yeah, okay, with the forex traders. I didn't mean to. That's
don't insult my intelligence.
That's a dark space to go down. You're trading inefficiencies, and that's you understand what you're doing.
Yeah, and I think what I'm doing now would not work in a traditional financial market because markets are quite efficient.
Okay.
Right. So this is a very, very opportunistic thing that because of where we are now with markets and because there's not enough people that understand crypto and have maybe a programming background like I do and are willing to find these inefficiencies, there is enough inefficiencies for everyone who's looking.
Cool.
You just got to know where to look and stuff like that. So that's what I will spend more of my time doing. That's what I have been doing. And now I'll just decide to hold less of the actual crypto. But when I made the bet, it was a much different equation, a much more different equation.
It felt a heads you win, tails you don't lose much kind of deal.
Yeah. I mean, and maybe it was like, heads you win a lot, and tails you still lose.
Sure.
But heads you win a lot.
Okay, so it was asymmetric rather than heads I win, tails.
Yeah.
So you hadn't protected yourself on the downside like I would try to do by having a balance sheet of really strong assets and things like that in a company that can't really go much lower than this level. You could have got wiped out.
Yeah, I could have got wiped out.
But you thought the upside, let's say it was 100% downside, but 700% upside, that's still a bet you should take.
Sure. Yeah. And I thought 100% was very unlikely, but maybe a 50% was possible.
Sure.
But even a
50% decline.
50% decline was possible. So 50% for 800,000%. And given that I actually understand where things were, and I was trading, and I was seeing like a lot of people some of the smart people I know are building stuff on these various networks, and it seemed like a good bet to make.
Yeah.
Now I wouldn't make the bet.
Okay, good to know.
So,
that's interesting. An interesting take from someone who's deep into the crypto world every day. Yeah, you wouldn't take that bet today.
No, I wouldn't. I think
you would look for a better bet.
I think the thing is just that what I think it's worth now and for the next couple of years is not worth the risk of actually owning the asset. Now, if I had to take a bet over a 10-year period,
okay,
I would say maybe Bitcoin is worth quite a lot of money.
Sure.
But the further you project out, and then you just have to hold like a religious person. And I probably will just for keepsake, like hold a certain amount of Bitcoin, a certain amount of crypto or whatever, just because. But that's not I'm not making it a financial decision. I'm just making a kind of a emotional decision there.
I still feel you understand it so much more than most people. Therefore, that's definitely not as bad as I think a lot of reasons why people are investing in crypto in the first place. You're looking at this from a totally different point of view, and I think there's a lot of interesting points there.
I mean, we've had discussions with our friends and the greater community, and when I meet people, I often say, well, I trade these inefficiencies in crypto markets and stuff, and people are really excited and really want to. And it's funny, if you looked at like how I've taken bets out on my career and on just my finances, you would say it looks super bullish. Like it's like there's no one that is more like optimistic.
You're a crypto bull.
Yeah, optimistic about the crypto. But I have to kind of calm people down and say, well, actually, I'm optimistic, but I don't think we're going to the moon. Yeah, okay. And I think that's the thing. I think it's very hard to have a nuanced view on any kind of thing that has an ideological religiousness to it. And I can understand. Like I'm kind of what's the word for someone in between. So you're not left or right. You're
I don't know. You're in the center. I don't know.
No,
on the fence.
There's like people that they're the types of people that believe that there should be less government.
It should be less government. Oh yeah, right.
Is it with a P or something? It's a libertarian. Libertarian. You heard the word?
No, I don't know.
Oh, libertarian. Okay, so libertarians believe that there should be less government.
Okay.
And I would say that I'm somewhere there, I'm somewhere around the less government thing. And Bitcoin is very, very closely aligned with that ideology.
Cool.
Right? It's freedom of I should be able to spend how I want. People shouldn't be able to like prosecute me. I should have freedom. And that kind of resonates very well with a libertarian idea.
Sure.
But if you want to make bad decisions, get up in the hype or get religious about something, or if only you would relinquish your logical faculties, then you'll be a millionaire, and that's just not how the world works. Really, it's about being nuanced in your view about as you absolutely know, you're like, this is a great company, but it's the wrong price, so you don't buy it, right? Yeah. And I think that is very tough for people to work out. I'm sure you've talked about Tesla, and like Tesla, okay, that's a bad example.
No, I love Tesla. Tesla's a fantastic company.
Yeah.
But there is no way that is a good investment.
Yeah, it's the wrong price.
Yeah.
It's the wrong price.
That's not the same thing.
Yeah. Just because something is great doesn't mean that you should overpay for it.
Exactly.
And I think that's true of anything. It's true of Bitcoin. It's true of your apartment. It's true of your partner. It's true of anything.
Yep.
And that kind of nuanced view, to be able to hold yourself back from something so exciting, is something that a lot of people either can't do or have never just been trained to do.
Sure. Therefore, when we talked about the bubble earlier, that is one of the common traits of a bubble, is that people get very emotional about the investment rather than rational about the investment. Yes. And we are definitely hearing the emotional side a lot, rather than you being very rational about it and having an actual thesis. And I think that's very important. I like to try to have a thesis about all of my investments. Justin, you've got a thesis on Bitcoin in particular, and that gives you something to stand on and go to sleep at night knowing that you have a thesis, you have a plan. You know where what you think it should be worth, some sort of ballpark, and that lets you not freak out when the inevitable crash comes along and the inevitable market panic and all these people who have been so emotional about it all of a sudden are losing a lot of money. Well, they think they're losing money.
And sleep.
And they're selling halfway to the bottom thinking it's going to zero.
Yeah.
And you're sitting there going, well, this doesn't really matter because it's worth this.
Yeah.
And I'm happy to it doesn't matter what happens in between.
As long as the thesis hasn't changed.
Yes.
And you got to back yourself, I think. And you need that thesis because, like you said, you need to be able to weather kind of the storm if things are a bit bumpy.
Yeah.
And things will be bumpy, especially in Bitcoin, but in most places.
Yeah.
But you also need to know when to get out. When you need to know when things are overvalued. And as like you will still sell a great company if it's incredibly overpriced.
Right. So you love Bitcoin.
Yeah.
And you've said, okay, I think in the next couple of years it's going to be worth $150,000.
Yeah.
Will you? Let's say someone offered you $300,000 for it.
Are you offering me $300 for it?
Let's say someone was offering
hypothetically,
$300,000 for it.
Okay.
You would then think you would take that.
Yes, 100%. You're talking about today, right?
Yeah.
Today, 100%.
Would you take $150,000?
Today? Yes.
Right, because it's reached its fair value.
I would say it's reached fair value, but also I'm dealing with it slightly different because it's not like a stock where you get to fair value and maybe you want to get a little bit extra because you still want to hold a great company at a fair price. I think with Bitcoin, I'm a bit more conservative. I would say, okay, well, maybe that's fair value, but I'm also programming in there that I'm probably wrong.
Okay, sure.
I'm probably wrong, and I'm getting a ballpark, and I've tried to be as conservative as possible while still seeing some upside. So if someone offered me fair value, I would take that instead of riding the dragon.
Try and get a fair value.
Yeah, exactly. I don't want to have to ride. I don't have to ride the roller coaster.
Yeah.
Like even though I could, I don't have to. So if you give me a ticket off the roller coaster, I'll get off.
Great.
But it has to be the right price.
Yeah. Good point. Yeah. Okay. Another quick question.
Yeah.
Same thing. $100,000.
Ooh. Today, $100,000. I would sell you some.
Okay.
I would say sell you some of my holdings probably. Yeah. I'd sell you some.
Because it's taking a bit of risk off the table?
Yeah. I don't need to. I'll take some of the risk, and I'd still like some upside if I'm wrong. Like you want to protect yourself if you're wrong on both sides. So I would like to take some stuff off the table in case I'm wrong and it's actually worth nothing.
Sure.
Right. But I'd also like to keep some in case I'm wrong and it's actually worth $1 million.
Okay.
So maybe there's that. But once we get to 150, I probably would sell most.
This is a very different philosophy to how I would invest in a stock. I would like to think that I wouldn't be taking money out of the table because I would try to be thinking of wanting to put money into such a great company.
Yeah.
So it's a little bit of a different nuance, but it's just because it's a different investment class. That's really more of what it is.
I mean, if we compare like stocks and this, you wouldn't. You've programmed in kind of a portion if you're wrong. What's it called? What do you call it?
A margin of safety.
Like you programmed in a margin of safety.
Yeah.
And if you got into like I think maybe my calculation just doesn't explicitly have the margin of safety.
Okay.
So I'm thinking about okay, well, that's fair value, but you would have already said fair value plus margin of safety.
Yeah.
Whereas I'm doing fair value, and I'm in my head I'm saying, well, I think the margin of safety I need quite a big range.
Okay.
So I'm willing to make decisions either way. But I think it's similar in the sense that you know when something's undervalued, and you know when it's overvalued. My range is just bigger because I'm dealing with something that's a lot certain. A lot less certain.
I would have to say that my range actually is pretty big too because I'm not very good at this whole valuing a stock thing. I like to think I'm pretty good at it. I can get a number, but it could be very wrong. And I need plenty of margin of safety and plenty of so I wouldn't even sell when it gets to 2 times fair value. Then I'm only thinking about selling. Because that's how far I think I could be out. Yeah, okay. Which is pretty significant.
So you would never sell some? Is that because...
No, I probably wouldn't.
Is there like an important reason for not selling some, or is it because...
Well, I know it's a great company and I'm probably wrong with how I valued it. And it's such a good company, maybe I undervalued it. Yeah. Maybe I thought fair value was what I thought it was.
But if you're...
maybe I'm fairly out and... It's better than I expected. I'm like, all right, well, I'm probably wrong here. So I'm willing to give it a lot of room on the upside.
Is that, and that's because I guess you were conservative with your predictions, right? So you say, okay, well,
I'd like to think I was, but
Yeah.
things change too. You have to reassess all the time. Companies have new avenues open up to them where they've, Google, for example, have, maybe they get into a new field that explodes and it takes over. Now search is not even as important as it was, and this whole new thing shoots out of nowhere for them, and it doubles their company in 2 years. Well, that changes everything very quickly. So I have to keep adjusting it and updating it as new information comes out. But anyway, interesting way to think about it.
I think mine's a little bit different as well, because I've already experienced a 300% return.
Sure.
So then whether I get an extra 10 or 50, maybe, and maybe that's not the right way to think about it.
Right.
But the way I'm thinking about it is like, well, if you could give me an exit today,
okay,
I've still got 300% return.
Sure.
Well, and if you offered me that, there would be a 400% return.
Right.
So that's fine. I don't need an extra 50%. But yeah, you're right. It could be millions. Could be 2 million.
We've gone way off topic.
Sure.
Let's go back onto some questions.
Okay.
All right, I think my next question is actually really important. So one of the biggest risks I see is that the exchanges where you hold your investments, like Bitcoin, are only relatively new. Not like Saxo Bank or Interactive Brokers in the stock market that have been around for many decades and they have insurance covering at least some part of your investment in that platform. What exchange do you think is the safest and why?
Okay, well, I would say that maybe I can class exchanges into like tier 1 for like the most secure, and like tier 2 for maybe, and then third ones are not really worth speaking about.
Okay.
So tier 1 would be like Kraken, Coinbase, and maybe Binance.
Why are they the best?
They've been around for the longest.
How many years is that?
If I think about Kraken, 2013.
Okay.
So 9 years, 8 years, 9 years.
Yep, 8 years.
And I think Coinbase is similar.
Okay.
2012 maybe. It was Coinbase.
Right.
And Binance is it hasn't been as long, but it's one of the biggest exchanges, and
Okay.
All but Binance, so Coinbase and Kraken haven't had any major scandals as far as I know. Binance has had a scandal a number of years ago, but they paid all them. They took future profits and paid back everyone. So they didn't just cut their losses; they actually paid losses back.
It still seems like these guys haven't gone through a GFC style event yet.
Oh no!
And
things break all the time.
Yeah.
Trading has stopped, because you only need that throughput from your server on an exchange when everyone is selling or everyone's buying.
That's right.
And the market can't take it. And that's a problem for any kind of market.
Do you think? I think the biggest risk in the entire crypto world is not the asset; it's the exchange.
I would say they're different things. They're different kinds of risk. And I try as much as possible to not have any of my assets on an exchange.
Oh, okay. So you can get it out of an exchange.
So that's the thing. And it's a relatively recent development that you can actually trade off an exchange.
Okay. Can you briefly explain that for some people out there who might want to do this?
There's two parts. So you can and have always been able to store your asset on a personal wallet.
Okay.
Whether it's on your phone or whatever, and that's really the only one that can screw that up is you. Okay. You can lose it. You can lose your phone. You can lose the car, the key. You can be reckless with your passwords or whatever.
Okay.
So that's one actually, and that's a safer way to store it than on an exchange if you trust yourself.
A massive thank you for watching all the way to the end. Now, the microphone actually is just cut out, so we missed the last 5 minutes of this interview, but if you have a question that you'd like me to ask Justin in a future video, please leave it in the description and I'll be sure to ask him. Thanks for watching, and I'll see you next time.